The golden rule, Andy, he who has the gold makes the rules, right? Now, you mentioned that 2019 change in the BIS, the Bank of International Settlements, the central bank of central banks, when they made gold a tier 1 asset. Explain the significance of that, because that was one of the first points that I think really started to trigger this process in your mind that this de-dollarization trend is really going to accelerate.
Yeah, well, since World War II, there's been one tier 1 asset by central bank standards, U.S. Treasuries and dollars. And in 2017, when we saw the Bundesbank lead the charge to repatriate their gold from the New York Fed, slowly thereafter, the Bank of Austria, Hungary, Turkey, Poland, the Czech National Bank, the Dutch National Bank, they all said, give us our gold back from the Bank of England and the New York Fed, and then quietly went on a buying spree where in 2018, the following year, those same banks bought more gold as a group than they did in the 60 years previously combined. Those numbers have continued to increase ever since, but in 2019, the BIS said, oh, by the way, gold is now tier 1, and that's a huge deal when you put all of this together. And look where we are right now. Countries are continuing to do the same thing. In fact, what we saw, what did we see? The Bank of India, who just bought 1.5 times the amount of gold they bought all of last year, just in the first 4 months of this year, but they repatriated their gold. They brought it back from the Bank of India to the point where much of their gold is, or from the Bank of England rather, much of their gold has been sitting there since 1991. They now hold almost all of their gold. But this is not something that is immune just to India here or centered just on India. We've seen Saudi Arabia and Egypt and 6 African countries just bring all of their gold back from the New York Fed. So not only is gold a tier 1 asset, a riskless asset, if it's a riskless asset, you want to have remove counterparty liability. So these countries who understand that it can replace the dollar or the bond market, rather, the treasury in terms of its status as a reserve, and being recognized by the BIS, they are also removing counterparty risk by taking it back from the Bank of England, which is the same thing as the London Metals Exchange, or the London Bullion Market Association, and the COMEX, which is the New York Fed. This repatriation is just as important as the accumulation.
Yeah. And in fact, Andy, according to a study by Invesco last year, a substantial share of central banks were concerned about what we saw with sanctions against Russia. And 68% of respondents said that they were keeping reserves at home compared to 50% in 2020. So in 5 years, according to this Invesco survey of repatriation, that figure is expected to rise to 74% of countries repatriating their gold. We know China has been on a massive gold buying spree, buying at least for the last 18 months, apparently a pause in the last month. We can get into that. Where is Saudi Arabia with its gold purchases?
Saudi, well, again, not everything, a lot of the trading is done in a very opaque manner in what's called the over-the-counter market on the London Metals Exchange. So it's far more private, far less scrutiny, less transparency. They've spent a tremendous amount of money investing in natural resource discoveries, in gold and silver mines. I don't know how much they've been buying. Suffice it to say, by all estimations, they have been buying a lot and using the selling of treasuries and replacing it with gold for the reasons that we just spoke about. And it was Nigeria, South Africa, Ghana, Senegal, Cameroon, Algeria, Egypt, and Saudi Arabia that just brought all their gold back from the New York Fed. So I don't have the official numbers, how much they've been buying, but if it's anything like the rest of the countries in the Southern Hemisphere, a lot. And let's remember one other thing, that Saudi Arabia has been selling their oil for the last year to China for yuan. And what then happens is that yuan is immediately convertible, because maybe China doesn't want to hold the yuan. They can immediately send it back and convert it into gold on the Shanghai Gold Exchange, which is cash and carry. Give me the money, take the product. And we're seeing an extraordinary amount of action coming off the Shanghai Gold Exchange, where these countries are accepting the yuan. For example, all of for example, you take a look at Iran, who just struck a deal with China to modernize their biggest airport. They're paying for it in oil, but any transactions that are done where yuan is received, they are immediately convertible into gold on the Shanghai Gold Exchange. This is how countries like Iran selling their oil for yuan, or Saudi Arabia doing it, or Russia doing it. These assets that are being sold for yuan can convert into the world's only other tier one asset. My guess, a lot more than we would be led to believe. And the repatriation from the New York Fed, I think, speaks volumes about their desire and their outlook to hold gold themselves and what that actually means. And people have been following me know I've been talking about Project Enbridge for over 2 years. And that is a cross-border digital payment system that was designed by China, Hong Kong, United Arab Emirates, and Thailand. And they are now a full member. I'll read to you. It says, Saudi Arabia has joined a China-dominated central bank digital currency cross-border trial in what could be another step towards less of the world's oil trading being done in U.S. dollars. The move announced by the Bank of International Settlements on Wednesday will see Saudi's central bank become a full participant in Project Enbridge. Now, what's interesting about Project Enbridge, they did 2 trial trades in 2023. The first was China using digital yuan cross-border with the United Arab Emirates for oil. And the second one was digital yuan cross-border for gold. And in both cases here, I think what you are seeing are the 2 assets that are being remonetized. As I mentioned, Iran is paying China in oil to modernize their biggest airport. And, when you take a look at what gold represents and the massive amount of gold accumulation by the Southern Hemisphere and the drawdown in all of the world's exchanges and the convertibility of gold off the Shanghai Gold Exchange for yuan, all of these things are coming together where I think it's fitting, it's setting up for a perfect storm where Zoltan Pozsar is right. This is about commodities leading the way, and these countries are in a race to slowly, methodically accumulate commodities without causing too much attention. All these countries are trading in local currencies. That chips away at the dollar settlement status. The reserve status gets chipped away when we see these countries shedding treasuries, like we've seen. China's down to just over 700 billion in treasuries from almost 3 trillion, and their gold holdings have increased, other than this month, which has remained stagnant for 19 straight months in a row. That's indicative of all of these countries in the Southern Hemisphere. They are slowly and methodically detreasurizing and accumulating gold and foreign or commodities in replacement. And I really do believe that these commodities, as Zoltan Pozsar calls Bretton Woods 3, a system backed by commodities, have become more valuable than the currencies that they're being bought with. And so the lack of treasury settlement is really the key. And I think this is the one thing that the people who, the dollar bulls and the recency bias, normalcy bias people are missing. And yes, there isn't something like the bond market yet, but I think gold represents not only, think about it, treasuries represent but a very small sliver of history in terms of other countries accepting a country's debt as an asset. But gold has a 5,000-year history of that, as do all of these commodities. There's an old saying, he who has the commodity, or the gold rather, makes the rules. And this flow of commodities, in particular gold and silver, from the west to the east is being massively underestimated. And I think that underestimation of the significance of that is a very, very big Achilles heel. This is something where these countries, I believe, are looking to commodities to replace, in particular gold, which is the only other tier 1 reserve asset, as mandated by the BIS in 2019. Look at the massive accumulation of gold by all of these Southern Hemisphere countries and the slow de-dollarization and de-treasurization. They are trading treasuries in dollars for commodities that cannot be weaponized or inflated away. And that's really, gold is the issue here, and it's being overlooked.